Do you own NIO stock, or are you thinking about buying some NIO stock? Do you own XPENG stock, or are you thinking about buying some XPENG stock? Are you confused about which one is better? This is the video for you. I'm going to be comparing NIO versus XPENG, both two electric vehicle companies based in China. Let's jump straight into it. Let's talk about branding. Now, the NIO brand is everywhere. If you do a Google search, you'll see NIO, 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 NIO. NIO is at the forefront of the Chinese electric vehicle market. Even so much so that they are being compared to the giant that is Tesla. They are being noted as the Chinese Tesla. Now, even though this may not be true, this is the brand image that they are associating themselves with. And it's very, very powerful for the stock and for the future share price appreciation of NIO. NIO even have their NIO houses, which are retail spaces. They're hubs where both current and prospective customers can go and enjoy coffees, can socialize, learn more about the company and the brand. And this is very, very powerful because it's creating a strong, reinforced community for NIO customers. Now, if we think about XPENG, if we look at XPENG, they're almost like an afterthought. You'd almost see them as a sister company to a Tesla or to a NIO. Even if you look at articles which talk about both NIO and XPENG, XPENG will often come after NIO has been written in the article. This is very powerful for the brand image of NIO. It's seen like the bigger, better company. So on this basis, I'm going to give 1 point to NIO. Next up, let's talk about their current trading performance and their recent trading performances. So if we jump into the NIO share price graph, what we will see is that the 3-month for NIO is a whopping 200% growth. If we then go to the 1 month, that's 101%, and the 1 week is 36%. So we can see it's tailing off, right? We have had explosion, and it's almost, the curve is almost flattening slightly, right? Now let's jump into XPENG. With XPENG, 3-month is 63%. The 1 month is 77%. The 1 week is 80%. So what do you have? It's almost the reverse. So the curve was flatter and now is getting steeper. So this is pretty interesting stuff. So it's almost like these two companies are going in the opposite directions. NIO is almost tailing off its growth. Rapid growth months ago, and it's almost coming to a point where it's a bit more steady. Whereas NIO is almost on the opposite side, where it was steady and it's now more rapid. As you can see from the 1 month, 1 week share price appreciation. So this could be a really good opportune time for you to jump in and buy some XPENG stock while it is on the rise, while it is exploding, before it gets to a more mature phase of growth that NIO is experiencing right now. So on the basis of this, I'm going to give 1 point to XPENG. So now we're at level pegging fields, XPENG 1, NIO 1. Let's now talk about the manufacturing capabilities of these two companies. XPENG already has a manufacturing plant in China, which is capable of producing 100,000 units per year. They are in talks and already have made progress in producing their second manufacturing plant that should be ready by 2022. Now, there's no news on how much units this can produce per year, but for argument's sake, we can safely say that it will probably double capacity to 200 units per year. So this is huge. The thing to know here is that year-to-date units produced by XPENG have been about 17,000 units. So this is well below the capacity of the first manufacturing plant, which is 100,000 units. So they are nowhere near their full capacity. So they've got a long runway ahead of them, and an even longer runway with their second unit. The question here is that, are they taking up too much cost? Are they being efficient with their manufacturing process, given that they have sold 17,000 units and they have a capacity of 100,000 units, there is a lot of underutilized capabilities there. If we jump to NIO do not have their own manufacturing facility. Interestingly enough, they actually use Jack Motors, a third party, to produce their vehicles. Now that agreement, they are able to produce about 5,000 units per month, and on double shift, this would equate to about 150,000 units per year. NIO year to date have produced about 31,000 units. Again, well under the 150,000 unit capacity of the Jack Motors. The thing to know here is that NIO produced over 5,000 units in October, which was very impressive and very good results, and resulted in a huge uplift in the share price. However, the capacity limit at Jack Motors is about 5,000 units. So they are probably stretched on the capacity side of things there. So NIO behind the scenes are probably looking at ways in which they can boost and really kind of cater to the growing demand for their products. So on this basis, I'm going to give a point to XPENG. So this is 2 to XPENG, 1 to NIO. So XPENG are actually in the lead right now. Let's now jump into the European expansion possibilities of these two companies, because they both have indicated that they want to expand into Europe next year. NIO has said that by 2021 they want to be in Europe, or they want to make plans to get into Europe. Now there is talk of Copenhagen being the first destination where they sell their cars, or they do their marketing in that area. Now, there is no other concrete or evidence to suggest that they have made any progress on this front. If we jump over to XPENG, XPENG have also indicated interest in expanding into Europe. They have actually sent 100 of their G7 vehicles to Norway, and there are 3,000 Norwegians who have shown interest in that, which is a lot more than the 100 units that they've sent. So they are making traction with their expansion into Europe. So this is fantastic news for XPENG. So on this basis, I'm going to give another point to XPENG. So right now we have 3 points to XPENG, 1 point to NIO. So XPENG are actually in the lead. Let's now talk about innovation. What innovative plans and strategies do these companies have in place for the future? Because this is what's really going to shape that share price trajectory going forward. NIO and XPENG both offer battery as a service. So if you don't know what battery as a service is, basically consumers can buy either a NIO car or an XPENG vehicle without the battery and pay for the battery on a monthly subscription. This will make the original purchase price of the car cheaper, and they will have a low monthly subscription fee for use of the battery, which they can then upgrade to a better, higher quality battery in the future, which will allow them to drive more miles on one charge. Both of these companies offer that. Let's move on to self-driving capabilities, because both NIO and XPENG have actually indicated strong interest in self-driving vehicles and self-driving software. However, neither of these two companies have made groundbreaking moves with getting close to offering this to consumers. So on this basis, I can't score a point to either side. And this is where things really get different for these two companies. If we talk about the mobile application, NIO has a very sophisticated mobile application, which almost works as a social media hub for both current and prospective drivers of NIO cars. The NIO app will allow them to engage with other NIO users, post pictures, post comments, ask questions, troubleshooting on their vehicle, allow them to book power charging for their cars, and a whole host of other things. So this is huge. The app also has a lot of traction and engagement. It's reaching about 1 million downloads, which is crazy when you think that NIO has sold 31,000 units to date and also 200,000 daily active users. So the market is really warming and adopting to the mobile application. And there's a whole range of things that NIO can do within its whole mobile application to really boost sales and really promote and boost its brand. XPENG does not have this. If we then move on to the battery swapping, NIO is at the forefront of battery swapping. XPENG does not offer battery swapping. Battery swapping offers a really nice, simple, easy way for users to swap out their battery very, very quickly in about 3 minutes, making the NIO cars very, very attractive as electric vehicles compared to XPENG. NIO also has its Power Mobile, which is a service that customers can just book appointments via their app and a driver will come out and charge their vehicle for them. Now this is amazing. This is an amazing improvement, amazing advancement in the electric vehicle space. And this is something that XPENG do not offer. So I'm gonna have to comfortably give this point to NIO. And so much so that I'm gonna have to give them 2 points. This is, if you're a basketball fan, this is basically a 3-pointer right here to NIO. So the score currently is 3 points for XPENG and 3 points for NIO. So now, in my opinion, based on branding, based on manufacturing, based on innovation, based on the current trading, it's level playing fields right now. So it's getting interesting. Let's talk about a recent volume of sales for XPENG and NIO. In what trajectory, what direction are these two companies going? Both of these companies had very good October sales. XPENG had about 3,000 units sold. This was an uplift of about 200% year on year. And as mentioned before, this brings them to about 17,000 units year to date. NIO, on the other hand, had about 5,000, just over 5,000 units in October. Year over year growth, this was about 110%. They had, so year to date, that brings them to 31,000 units sold. This is about, again, another 100% growth year over year. Both of these companies are doing very, very well. Both of these companies have seen massive uplifts in their sales. How am I going to score this one? I'm going to have to give a point to NIO based on volume. NIO's volume is about double that of XPENG. So NIO is really getting a lot more traction, a lot more sales for their vehicles, and this should grow exponentially going forward, given the innovation and brand image that they have associated to them. So now we have 4 points for NIO and we have 3 points for XPENG. In terms of profitability, both of these companies are pre-profit companies, which gives a huge opportunity for current shareholders, because as soon as these companies become profitable, we saw what happened to Tesla, they are going to explode. These companies are going to explode, and it's going to be amazing for our shareholders. NIO's net margins for 2019 stand at negative 190%. XPENG's net margins stand at negative 160%. So there's not too much in it in terms of profitability for these two companies. It'll be interesting to see when the 2020 full year results are released to see how that changes. But once again, huge opportunities for current shareholders because the share price is going to explode. So on that basis, I'm going to give another point to NIO and another point to XPENG. Let's finally touch on the price of each stock. NIO's forecast revenue for 2020 is $2.2 billion. For XPENG, that is $0.7 billion. The market cap for NIO right now is $56 billion. For XPENG, it is about $25 billion. NIO is a bigger company than XPENG. So it means that the cost for a share of stock of NIO on a revenue multiples basis is 25 times. And for XPENG, it is 35 times. It is a lot more expensive to buy a share of stock of XPENG right now than NIO by a factor of 10 times. So the NIO stock is far cheaper. So I'm going to have to give a point on this basis to NIO. And that brings us to the end of the video. So please do subscribe to the channel. I've got a lot more exciting content for you. Tomorrow I'm releasing a video which is going to go through every single growth plan and strategic initiative that NIO has in place going forward, which should help drive that share price up, in my opinion, to over $100. So you don't want to miss that. Stay tuned. Take care.